Happy Thirsty Thursday. Okay, today's video is going to be, it's going to be a doozy. If you love SoFi, this video is going to be for you. And if you love Robinhood, this video is also going to be for you. I love SoFi, I love Robinhood, but I do know that there's going to be a point in time in my life where I'm going to be parting ways with both companies. Because, I mean, as an investor and trader, right, you gotta sell shares in the future. There is no such thing as holding a company forever. And if somebody has that mentality, they don't have an exit strategy. And they also don't have a plan, and they haven't probably ran any numbers. And they're probably just hoping and guessing. My strategy I've talked about a lot with SoFi here on this channel. I've run projections. I've run estimates. I'm looking to really hold on to SoFi for a 10-year-long journey because that's what the CEO has really stated. That this company over the next course of a decade with the Gen Z, even more a Gen Z entering the workforce, the younger generation. I do have a lot of Gen Z viewers. I love each and every single one of you. I'm 37 years old. I'm a millennial. And with Gen Alpha entering the workforce in the very near future, SoFi is going to attract so many customers. Not to mention so many people that are just really fed up with the banking system and how you have to either pay money to keep your money in a bank, which is ridiculous if you really think about it. A lot of these banks out here charge people for having a savings, a checking account. They offer very low compound yearly interest on your money, and it's really a scam if you think about it. A lot of people are just fed up, so SoFi is picking up a lot of those people as well. If you hear background noise, my windows are open in my house because I'm airing out right now. I'm suffering with some allergies. Not to mention my eczema is running rampant. This weather fluctuation here on the East Coast is utterly terrible. Doesn't matter where you are, whether you're in Florida or maybe you're up in Maine. The weather right now sucks. So right now it is 10:21 a.m. Please sit back if you're listening to me and grab some coffee, grab some water. This video is going to be a little long. Cheers. SoFi versus Robinhood. SoFi 10-year vision for me. What is going to make me sell some SoFi shares earlier is if the company's strategy really changes. Now, am I looking to hold on to Robinhood for 10 years? More than likely, probably not. And the reason being is because Robinhood, like I said primarily in yesterday's video, which you should definitely check out because I covered their earnings in that episode, they're very much a risk-on company, which means when the market wants to take risk, the company's earnings, EPS, they're going to go parabolical. And if you're a shareholder and you're buying Robinhood when it is going through a very bad cycle where the market doesn't want to take risk, and you buy at lows, and then when the market wants to take risk and you have a stock that's going parabolical, well, that can very much be a strategy, and that can very much be an indicator for you to start getting out of your position. It's all about why you get into a stock, and it's all about how you get out of a stock. You have to have a game plan going in, and you have to have a game plan going out, okay? I love SoFi. I love their business. I trust the management team. I trust God more than anything, but I do give their management team trust with my capital because they have been executing. Robinhood, I am beaten down right now on my positions on my channel profile, my public account here on this channel, and also on my private account too. I'm very much in the negative. SoFi, on my private account, I have a $7.41 average. My channel account here is right above 14 bucks. So obviously SoFi, I'm very much more well-positioned with massive gains. But here's the big thing, and this is something that I kind of really want to go over, SoFi versus Robinhood here, is that both are led by great management teams. It's just that you have a business model that for SoFi is producing this. SoFi's business model is going on a linear line to the upside, okay? Quarter over quarter, beating on everything. EPS, earnings, revenue, net revenue, guidance, right? Member growth. Just a linear straight line. Just a straight line up, okay? It's kind of hard for me to do this with my hand because I'm looking at myself on my screen recorder too. Robinhood is not linear. Robinhood will go up, pull back because maybe the market's cooling off, go up higher. Oh, no, we got to pull back. Oh, wait, the market's going parabolic again. Boop, and it goes up. Now there's great man, I really like the CEO of Robinhood. And if you're a Robinhood shareholder, I'm not bashing on their management team. Their earnings call, honestly, was the way they do earnings, very visual, and they did have influencers, YouTube influencers actually zoom in and ask questions. Hopefully SoFi does that someday. So Anthony Noto actually just did an interview with another YouTuber, which was awesome. I actually covered that in my video a couple days ago. I believe it was Saturday's video or Sunday's video if you check back on my channel. But SoFi, I do believe, is going to be doing a more in-depth earnings call. But on the flip side, I mean, one of the reasons why they do their earnings early in the morning is to be very strategic. Anthony Noto Anthony Noto tells it how it is. He doesn't pump his stock. He doesn't, but I mean, does he sandbag in a way? All CEOs sandbag. Hey, we're going to be doing this, but realistically, they're probably going to be doing up here. Every CEO does that, okay? But he doesn't pump his own stock. He'll go ahead and tell it how it is, and he'll just look people in the face, answer questions. And from everything that I've seen about Anthony Noto, the guy has just turned companies into monstrosity of money-making machines. He has had so many other positions. Now, on the flip side, Vad over at Robinhood, the guy's an innovator. Okay, the guy has literally been... so many Wall Streeters looked at Robinhood stock as a meme stock, as a nothing. And the guy, in my opinion, is a younger version of Mark Zuckerberg. And just listening to him, just seeing how he answers questions, seeing what's in his brain out on paper, and just understanding what he has for the future on how they're going to keep innovating Robinhood and keep releasing new products that will go ahead and boost up their current members to spend more money. Because there will be a point in time where Robinhood's members' growth is going to slow down. And then they're going to be focusing on what they have. That's, in a way, very similar to Meta. Because back in 2022, Mark Zuckerberg came out and said, hey, our new members on our platforms are slowing down. We're going to be altering our business model to enhance our products to pretty much go after the audience that we have. It's like you're turning it's like, if you keep the number simple. If you have a business model that is all around analytics and you no longer get analytics, now you make money off of, let's say, the current amount of analytics you have. You don't go after any more of new analytics. You think of ways on how to make money from the current people that you have using your platform. That's what Mark Zuckerberg has done, and that's essentially what Vad at Robinhood is going to be doing here. So I want to go over some data first, because we did get a little bit data come out today. Then I want to go over a lot of SoFi versus Robinhood data as well. So we did get initial jobless claims. The market is very much all over the place. Obviously, this data is very mixed here. CPI is going to be very much big for tomorrow. But overall, I mean, the market right now, we got 34 days until the next rate cut. The market is very much not looking at a rate cut unless something happens here in the Labor Department. we're more than likely not going to be getting a rate cut. So the market needs to really grab its nuts and be a man and say, okay, let's get out of this like dip that we're in and let's start going higher. So I ended up having AI, and I do use AI a lot for gathering information, especially if you've been following me here on this channel. And just very something basic that I've ended up that I asked Google Gemini to really consolidate here. Basically saying, hey, show me quarterly growth rates and returns from Jan 2025 to December 25, SoFi versus Robinhood. Okay, if we want to really, in yesterday's video, I did go through Robinhood's earnings, what they gave to investors relation. Like I said, if you really want to see an in-depth Robinhood's video, their earnings, check out yesterday's video. And then SoFi, after their earnings, I actually went through an in-depth of their presentation as well too on their website. If you are ever unsure about anything about a publicly traded company, you got to go ahead and go onto their investor relations page on their website and look at what they're giving people like me, people like us. I'm a retail investor. Okay, I'm not a Wall Streeter. I'm not some big wig dude. I run other YouTube channels, believe it or not. I have not advertised this YouTube channel on my other YouTube channels. I really would love to grow this organically. Someday I will advertise my my 207,000 subscriber YouTube channel. I will let them know that, hey, I run a stock channel as well too over here. But right now I'm just really looking to gain a organic audience of SoFi and Robinhood lovers out there, right? Okay, so let's go ahead and compare both these companies straight off the bat. Revenue adjusted, Q1, EPS, obviously SoFi, 33%. Robinhood, you basically see 50%. Q2, 44 versus 45. Q3, 38, 100. Q4, 37, 27. Now, what do you notice about SoFi right off the bat? Phenomenal growth rate numbers. Like, it's above 30%. So, Anthony Noto has already stated that they are on track this year to put up 30%. And Anthony Noto said in an interview that he did with another YouTuber, Tanner, at Future Investing YouTube channel, it would be a shame if their first quarter of 26 was their highest growth rate of the year. And you got to remember, if Anthony Noto is saying 30, 35%, he's more than likely, he is sandbagging, okay? And he's also talked about sandbagging during the interview as well. So, obviously, phenomenal frigging growth, okay? I'm invested in a company that's growing quarter over quarter by 30%. I mean, that's awesome. Totally ignoring the stock price. SoFi put up amazing numbers and the stock price sold off and I bought more shares. Okay? Once again, you can have a phenomenal company and a shitty stock price. You can have a phenomenal stock price and a terrible company that's going to ultimately drag the stock price down. Because if you have a crappy company and a great stock price, ultimately the stock price is going to pummel down. Okay? It's going to end up happening. It just takes some time to actually do so. Hold on. I barely edit around here. I'm a real person, and I'm also a real YouTuber as well. So my throat does need lubrication. But I am very happy buying discounted bonus shares. And I'm actually over, I believe, 2,050 shares of SoFi. I very well may pick up more bonus shares if they continue to sell off and put up great numbers. Robinhood. Why did Robinhood's numbers explode and why are they all over the place? Well, it's because the market was risk on Q1 last year, right after the presidential election. The market was risk on, okay? Q2, Liberation Day, what ended up happening? The market sold off. However, Bitcoin did not go through a downward cycle like it is right now. Bitcoin, as we're seeing right now, is in a recession. Okay, it really is in a crypto recession. So, during the summer last year and also into Q4, what do you see? Massive growth. Massive growth because crypto is going parabolical to all-time highs. Now you also see that there's not really a whole lot of growth. So what is going on here in my personal opinion? I'm not a financial advisor. I'm just a retail investor, right? What do I see pretty much going on? What I see pretty much going on here, hold on one second. I gotta go ahead and screenshot something because I forgot to add it. Hold on. Okay, I just screenshotted something. Okay, what I see going on here is I see a company that I feel being more confident to have a lot more of my capital invested in. I now have tens and tens and tens of thousands of dollars invested into SoFi. I have massive gains on my private account. I have gains on my public account here on this channel, which I'll get to momentarily. But the whole thing about it is that I feel comfortable having massive amounts of gains in Robinhood. Would I feel comfortable having massive gains in Robinhood? Realistical answer, the answer is no. Here's why. If I were to be up by a couple hundreds of percents on Robinhood, I would be slowly chiseling away profits. And the reason being is because if I am up by hundreds of percents on Robinhood, that means that the market is risk on. And that means the stock is soaring higher. That means they're crushing earnings. But the moment that the market goes to risk off, I know that Robinhood is going to experience a drawdown. So that is the time to really take profits, in my opinion. However, the market is risk off. So therefore, is it the time for me, Nightmare, Christopher, my name is Christopher, by the way, is it the time for me to invest tens of thousands of dollars into Robinhood over the course of the next quarter? For me, yeah, I'm buying Robinhood hard. I am. I'm buying Robinhood on my public account here. I bought shares yesterday. I bought shares the previous day. I've been buying Robinhood for the last couple weeks now. I ended up buying over $1,000 worth of shares on my private account, and I'm going to be building a massive position on Robinhood. Yes, my average on Robinhood on my private account is in the red, and also on my channel account here, it's also in the red by a greater number. I actually have a little bit of a better average on my private account than I do on my public account. But the point is that this is my opportunity to build a very large position into Robinhood. Now, does that mean that I'm going to be trading Robinhood? The answer is no. Because when the market's going to go back on risk on, it's going to go risk on hard. Okay? You got to remember this about the stock market. The longer that we go risk off, the longer we are going to go risk on. 2022, the entire year was risk off. 23, the market turned very much into a bull market. And then 24, it was still risk on. 25 had a hiccup in the very beginning, but then it soared through all new time highs. So the entire year of 2022 was crappy. Imagine if this entire year, for whatever reason, is going to be crappy. 27, 28, it's going to probably more than likely be a banger. So this opportunity for me and what I'm doing with my money, once again, this is what I'm doing with my money here. I'm looking at Robinhood and I see such a great opportunity. Now, SoFi versus Robinhood. SoFi's mentality for me, I'm a long-term investor. I'm not looking to take shares. I'm not looking to cash out profits. But as for Robinhood, I just ended up buying some shares here today on the channel account. Bought a couple more shares here. Nothing too crazy, but I'm nibbling on in. 2 shares of Robinhood today. For anyone that is new here, welcome. If you could do me a favor and like this video, probably should have said this in the beginning. And also subscribe for future content. We're doing a public account challenge here, taking this amount to 6 figs over the course of 17 months. If I deposit a large sum of money, such as $2,500 next month, because the market's playing stupid games and selling off again, then the account challenge goes down to 16 months, because it's going to be cheating if I keep bringing in more and more money here, right? However, my positions here, what do you really notice about my Robinhood position? Well, obviously, I'm down by 26% on this account. My private account, I'm actually not down anywhere close to 20%. I actually have a pretty lower average on my private account here. But on the public account, I've stated multiple times, I would be okay if I had a cost basis in Robinhood of anywhere between $6,000 to $8,000, because this stock can very much move very quickly to the upside when the market goes risk on. And the management team is lock on. They're committed about shareholder value, but understand that Robinhood's business model is based around gambling. Okay? Don't take that as a bad thing. It's just what it is. I mean, if you are invested in a processed food company, your business model is making people fat. Okay, I don't mean to offend anyone if you're offended by that statement, but it's the friggin' truth. Robinhood's business model is around gamblers. The more risk that people want to take, the more their EPS and earnings are going to go through the friggin' ceiling. SoFi, their business model is around disrupting and disturbing the cabal, demonic banking system that we have lived in for so many friggin' years. I love SoFi because they're making banks like JPM fear them. Yeah, Bank of America is putting out negative ratings on SoFi because Bank of America fears them. I love SoFi for that. I love Robinhood because when you are in a risk-off market, you gotta be buying this type of business model. Coinbase is very much different, and I've spoken about Coinbase before. Coinbase, I actually was thinking about buying when it was like $200. I'm actually really glad that I didn't, because Coinbase is in a very much Coinbase recession. But Coinbase revolves all around crypto. Robinhood is diverse in other areas, but hold on, lubrication. Oh man. Coinbase is all about crypto. Robinhood is all about basic investors. You don't need to be in the crypto market. Full disclosure, I actually don't have any position right now, or rather exposure to crypto at all. I ended up getting burned a little bit by crypto in 2021, believe it or not. That story is for a different video. But ever since then, I've really swayed away from crypto. I would honestly rather do penny stock trading rather than being in a crypto market. In all honesty, I am a very much growth investor and a growth trader, if anything. So, Hood, $6,000 to $8,000 total cost basis position size. I feel very confident in the management team. I feel very confident in their business model, and it is a buying opportunity for me and my capital during these like bad, downward periods. So, to really wrap up this video here, once again, if you did enjoy it, please subscribe for more content. I try and make videos Monday through Saturday. So you do get daily videos from this channel. You're more than likely never going to go bored with me talking about the market, because the market you can talk about every day. I may get into live streaming in the future as well too. But if you are a SoFi shareholder or Robinhood shareholder, let me know. And if you think I'm utterly I'm Italian also, but I don't speak Italian. If you think I'm bat poop crazy for buying Robinhood during a drawdown like this, let me know down below because I'm curious. I could be dead wrong. Maybe Robinhood never recovers to all-time highs. Maybe crypto stays stagnated for the next couple years. I could be wrong. Okay. Have I been wrong before? Yeah, I have been wrong before. I'm not God. I'm not perfect. However, I just look at what I see in front of me, and what I see in front of me is a business model that is based around risk. The market right now is obviously risk off, and they're trending very lower. So, that's really the video for today, everyone. New video tomorrow. Like I said, if you enjoyed this, let me know down below. Otherwise, I'll see you all in the next one. Later.